What are petty cash funds and why are they used? Many businesses require transactions to be made with a check or electronic transfer as a control activity. However, this may not always be the most viable option, particularly when only small amounts of cash are needed. This is where the petty cash fund comes in. A petty cash fund is a small amount of cash kept on hand to pay for minor expenses. The employee responsible for the petty cash is known as the custodian. There are three activities involved in a petty cash fund: establishing the fund, making payments from the fund, and replenishing the fund. In order to establish a petty cash fund, a check needs to be written for the amount of the fund and then the check needs to be cashed. This is recorded in a journal entry. Meet Sophia. Sophia owns a clothing store called Style Maison. On the 1st of March, Style Maison cashes a $200 check to create a petty cash fund. The following journal entry is recorded. Petty cash is debited and cash is credited for $200. Making payments from the fund can be done in two ways. Cash from the fund can be used to make payments or to reimburse employees for business payments they have made personally. The custodian must keep and collect receipts from any payments made. However, journal entries are not to be made when payments occur. Journal entries are needed though when it comes to replenishing the fund. In order to do this, the cash remaining in the fund must be counted and the company must cash in a check to bring the cash in the fund to its original amount. Remember Sophia? Well, by the end of March, she spent $28 on postage and $32 on store supplies. Therefore, she made the following report, which shows the original amount, the amount remaining, and by subtracting these, the amount needed to replenish the fund. It also shows the total receipts. They both equal $60. She can then cash a $60 check and record expenses like this, simply increasing the expense accounts in regard to the spending and decreasing the cash for the check amount. Sometimes the total receipts don't equal the amount needed to be replenished. Say Sophia's totals didn't match. Mistakes happen, sometimes receipts are lost or incorrect change is given. In this case, the difference between the totals will be charged to an account called cash over short, which is a temporary account that can have either a debit or credit balance depending on the scenario. In this entry, the cash over short is debited, which increases expenses. Doing this ensures the fund is replenished properly. Thank you.